Hello, Explorer friends. On March 18, 2026, I'll introduce Arista Networks, Inc., the friend that moved plus to 29%. Hello, Explorer friends. On March 18, 2026, today's friend is Arista Networks ticker ANET, which climbed to 29%. Not a fireworks kind of day, not a meme stock explosion. But the interesting part is this. There was no fresh official company announcement that we could find in today's packet. No earnings surprise, no new contract headline. So why did the market still nudge Arista higher? That is the question worth exploring. Let us start with the numbers, quick and clean. ANET gained 2.29% on the day. Over the past 5 trading days, the stock is up about 1.91%. Volume came in around 4 to 17 million shares. We do not have a reliable relative volume figure today, so we cannot say for certain whether this was unusually heavy or just normal traffic. What the numbers tell us is that attention was real, people were buying. But the move was measured, not manic. This was not a squeeze, this was not a panic chase. It looked more like steady interest than a single headline shock. Attention was real, proof was limited. That is the honest starting point. Let us reset the map for a second. Before the stock move, we need the business picture. So what does Arista actually do? Here is the simplest way to think about it. Imagine a massive data center, a building the size of several football fields, packed wall to wall with servers and computing machines. Those machines are incredibly powerful on their own, but power means nothing if the machines cannot talk to each other. If one server finishes a calculation and needs to hand the result to the next server, that handoff has to happen at blinding speed. If it does not, the whole system slows down. Bottleneck, traffic jam, wasted compute. Arista builds the networking equipment, the high-speed switches and routers that keeps data moving between those machines without clogging. And it is not just the hardware. Arista also makes a piece of software called EOS, which stands for Extensible Operating System. Think of EOS as the traffic control brain sitting on top of the physical roads. It watches the flow, manages the routes, and helps network operators see what is happening across thousands of connections at once. So what does Arista actually sell? Not the AI model, not the chip itself. It sells part of the network that lets all that expensive hardware work together as one coordinated system instead of a pile of isolated boxes. Here's a picture that might help. If AI chips are the engines, Arista sells the high-speed road system and the traffic control logic that lets those engines run as a fleet. Without the roads, the engines just sit there, revving in place. One line to keep, Arista sells the fast internal connections that make giant data centers and AI clusters actually usable. Here is the next crossroads, and this is where many beginners get lost. Knowing what Arista builds is not the same as knowing how the money shows up. Useful technology does not automatically mean clear revenue. So where does Arista actually get paid? The main money engine is hardware. When a large cloud operator or a hyperscaler decides to build a new data center wing or upgrade an existing one to handle faster speeds, say moving from 400 gigabit networking to 800 gigabit networking, they need to buy switches and routing gear. Arista is one of the companies they call. That initial hardware purchase is where the biggest chunk of revenue starts, but it does not stop there. Once the hardware is installed, customers often sign support and maintenance contracts. They pay for technical help, replacement parts, software updates, bug fixes, and ongoing access to EOS features and network management tools. That support layer adds a more recurring, steadier stream of income on top of the lumpier hardware sales. Then is this basically a software subscription company? Not really. The software matters. EOS is a genuine competitive advantage, but the engine still starts with big hardware purchases. The subscription-like pieces are more of an attached layer than the core driver. So when you hear someone compare Arista to a pure SaaS company, that comparison is a little off. The business rhythm is closer to a hardware-led model with software and support bolted on. Who actually writes the checks? Mostly very large customers, cloud giants and hyperscalers, the companies running enormous computing operations at global scale, big enterprises with demanding network performance needs, financial firms that care deeply about speed and reliability, and in some cases, government and industrial customers with specialized requirements. What drives growth? A few things. First, more AI cluster buildouts. As AI workloads get bigger and more complex, the clusters need faster internal connectivity, and that means more networking gear. Second, speed upgrade cycles. The industry is moving through generations 400G, 800G, and each jump can trigger a wave of new purchases. Third, share gains. When customers decide they prefer Arista over older legacy networking vendors, that shifts wallet share. Fourth, expansion inside existing accounts. A customer that started with one data center wing may come back for 3 more. But here's the dependency that matters most. Arista's revenue is tied to real customer capital spending decisions. If a hyperscaler decides to pause or slow down its data center build-out for a quarter or two, Arista feels that directly. AI excitement in the abstract is not enough. The money only flows when customers actually place orders. So the money follows network build-outs, upgrades, and support contracts, not just AI excitement in the abstract. Now we can walk into today's village news with a cleaner map. let us separate what we actually know from what we are guessing. This part matters a lot because the evidence today is uneven. Confirmed facts first. Arista is a major provider of networking gear and software used in cloud and AI data center environments. That is not new information, but it is the foundation. The stock rose 2.29% on March 18th, and the 5-day gain sits at 1.91%. So buying interest was real, but, and this is important, the source packet did not identify a fresh official company event or filing tied directly to today's move. No new earnings, no new contract, no new product launch announcement. That lowers our confidence that this was a clean, company-specific catalyst day. Now for the headline-level clues. Several articles were linking Arista to the broader AI infrastructure demand story. The idea floating around was that networking names may benefit alongside chip winners, that after investors get excited about AI compute, they start asking who helps all that compute actually work together. Some coverage also framed Arista favorably compared to legacy networking peers like Cisco, suggesting a quality or growth premium. And there was general chatter about AI switching and related infrastructure names that may have kept Arista inside the active AI investment basket. Attention was real, proof was limited. But here is the honest read. These are clues, not proof. Articles pointing toward a theme are not the same as a confirmed company catalyst. Basket trading, where investors buy a group of AI-related names together, can lift a stock even without a single new announcement from that specific company. Then did the stock rise because Arista announced something major today? Based on this packet, we cannot say that. The business fit with AI infrastructure is real and durable, but today's specific trigger looks more like sector narrative and article-level framing than a fresh confirmed Arista Mistime event. The business case is solid, the same-day catalyst case is softer. That distinction matters. From here on, a little of your Fox buddy's judgment comes in, but we will keep the clues and the proof separate. Now, let us hear what your Fox buddy thinks. The most plausible read is that the market was revisiting Arista as an AI infrastructure enabler. This is a pattern that happens often. After chip enthusiasm runs hot, investors move one layer outward and ask, who helps those chips work together at scale? Arista fits that map well. High-speed data center networking is not a side story when AI clusters are getting larger and data movement becomes a real constraint. So the stock may have benefited from that logic even without a fresh company announcement. Another possible read is that part of the move was relative positioning. Some investors may have been rotating away from slower growth legacy networking names and toward a company seen as more exposed to modern cloud and AI buildouts. That kind of relative trade can create buying pressure, even when the absolute news flow is quiet. A more cautious read is that this was mostly basket trading and sentiment reinforcement. If that is the case, the move could fade quickly if no stronger company-specific proof appears in the next few sessions. But I want to be clear, this is just your Fox buddy's interpretation. The final judgment always belongs to the explorer, friends. Nobody here is pretending to know the exact reason with certainty, and this is exactly why risk matters more than a confident-sounding story. Then, what could break this story fastest? Usually not the slogan, but the spending cycle behind it. Let us walk through exactly 3 risks. Risk number 1, large customer spending pause. Arista depends heavily on very large customers, hyperscalers, and cloud giants that can swing orders in big chunks. If even 1 or 2 of those customers slow their network spending for a quarter, the revenue impact can be sharp. The signal to watch, commentary from major cloud customers about slower data center or networking capital spending. That is the canary in this particular mine. Risk number 2, AI networking competition gets tougher. Arista is not the only company trying to ride the AI infrastructure wave. NVIDIA is pushing deeper into AI networking. Other vendors are bundling networking into full-stack AI solutions. If customers increasingly choose those bundled alternatives, Arista's growth narrative could face real pressure. The signal to watch, competitor networking growth rates, customer design, win commentary, or signs that rival AI networking platforms are gaining share faster than expected. Risk number 3, theme trade fades without fresh proof. Because today's move appears to lean partly on AI infrastructure narrative rather than a fresh official Arista event, the stock could give back south gains if the market stops rewarding the theme, or if no stronger company-specific evidence appears soon. The signal to watch, whether follow-through buying weakens quickly in the next session or two, and whether any new company-specific news, filings, or management comments emerge to evidence the move. If tomorrow brings no stronger proof, the market may treat today as a theme trade rather than a fresh chapter. That is not a disaster, but it is worth knowing. So instead of guessing harder, let us build tomorrow's checklist. Here are the things worth watching in the next session or two, and they are all tied specifically to Arista and this setup. First, does ANET hold its gains or build on them even without a fresh official company announcement? If it can hold anyway, that suggests the market is willing to keep pricing Arista as a durable AI infrastructure beneficiary rather than just a one-day headline trade. Second, do AI infrastructure peers and networking-related names trade in the same direction, or does Arista start to separate from the group? That helps tell us whether today's move was mostly basket-driven, or whether Arista is attracting more specific company-level attention. Third, do new analyst notes, interviews, or reports mention Arista specifically in connection with AI switching, cloud buildouts, or 800G adoption? That would sharpen the story from broad theme exposure into a more company-specific demand narrative. Fourth, do major cloud and AI infrastructure customers say anything that changes the expected pace of data center network spending? Arista's revenue engine is tied to real customer build cycles, so customer spending language matters far more than generic AI excitement. Fifth, does the stock's trading action look orderly, or does it lose momentum quickly once the opening attention fades? A stable tape would fit a steady re-rating story better than a fast theme-chasing pop and fade. Now, before we wrap up, here is the study pocket, the part that is meant to stick with you long after today's ticker fades from memory. In infrastructure booms, the obvious winner is not always the only winner. When a new technology wave hits like AI right now, the first thing everyone focuses on is the core product, the chip, the model, the flashy thing. But as the wave gets bigger, the bottleneck shifts. Suddenly, it is not just about having powerful machines. It is about connecting them, coordinating them, moving data between them fast enough that the power actually gets used. Here is a simple framework you can reuse. I call it the bottleneck map. Ask 3 questions. Where is the expensive part? What keeps it from being fully used? And which company gets paid to remove that bottleneck? In AI, chips matter enormously, but networking can matter more as clusters get larger and data movement becomes the real constraint. Arista sits right at that constraint point. This framework is not just for Arista. You can use it across semiconductors, servers, storage, and networking. Do not stop at the headline product, follow the bottleneck, and then follow the money. A simple way to think about Arista specifically is this. When powerful machines need to work together, the network stops being background plumbing and starts becoming part of the value chain. So here is where we land. The business fit between Arista and AI infrastructure is a fact-based foundation. That part is solid, but today's exact trigger is less certain. It leans more on clues and interpretation than on a confirmed company-specific event. The numbers showed real attention, but the proof behind the attention was still indirect. That is exactly why the next-day checkpoints matter so much. Facts, clues, and interpretation do not all carry the same weight, and a good explorer knows which lantern is brightest before deciding which path to trust. This kind of story is best used as a study map, not as a trading command. Let's check another company together tomorrow. See you.
We're all like Joe.